Good afternoon, everyone, and welcome to another edition of Beyond the Bell. It is Tuesday, April 2nd, 2024. It is 60 seconds after the bell, which means it is time to go beyond the news, beyond the charts, beyond the bell. Brought to you, as always, by our good friends over at the Blue Sky, a trading company for the clearest path to a live brokerage account. Live trading with Mike every day in the Discord in this outstanding show. There's no reason to get your education or your accounts anywhere else. So thank you, as always, to Blue Sky for putting this show on their social media channels. Boy, what do you even say about a day like today? Like, you know, how do you solve a problem like Maria, I guess? I don't know. Whatever the case may be, right? It's a, boy, interesting day. So we're going to jump right into it, guys. We're going to get into the big picture here before we go any further. And I want to specifically look at the 5-minute. Now, usually we look at the 4-hour chart to start with, which, of course, we're going to get to momentarily. But we got to start with the 5-minute. Okay. I base I'll get this eventually. Stay with me. So I base a lot of some of the volatility stuff that I look at, like ATR on a 5-minute level, on the NQ. Right now, the NQ is predominantly what I trade, but I do look at and trade other assets as well. But when the NQ, because of just how nuts it can be, when the NQ isn't really doing a whole lot or not really trending in one direction or another, it does give you a little bit of a barometer of what's going on in the markets overall, correct? So this white line here is where we opened up. Actually, it's about 5 minutes off. Let's slide that back here. So once we opened, guys, just not a lot going on. The ATR actually was below 15 for a large part of the day. There's times where the ATR is above 15 in the pre-market, right? So the fact that we started up above 25 and we quickly retreated below 15 just shows me. And you can see, just looking at these candles, this is not a huge scale this is a decent sized scale on the right hand part of the chart. Just not a lot going on. Now, our standard deviation width was pretty high, right? But where did that come from? It all came from this. Basically, starting at about 4:30, we broke down, 4:30 a.m., we broke down below 500 and pretty much look out below at that point. It was about almost a 300-point, actually I think it was basically a 300-point move down, with the majority of it, guys, happening in the hour before the New York Open from 8:30 to 9:30 Eastern time. Now, I know there's a lot of you guys that trade after hours, pre-out, all that, and that's fine. And if you find a system with an edge that works at a particular time, all right, there's nothing wrong with that, right? I do I would say 99% of my futures trades over the years. I can only think literally off the top of my head of 2 or 3 trades I've made that weren't between the hours of 9:30 and 4 Eastern time, the regular New York session, the stock trading session, whatever you want to call it. And so I'm watching this and I'm excited, right? Because my game plan is I usually look at the markets about an hour before the markets open, but it's usually about 30 minutes before the market open. I'm paying a little more attention. About 15 before the markets open, I'm watching the markets as though I'm going to be trading, even if I'm not. So I had watched a decent amount of the price action in the hour to 30 to 60 minutes leading up to the actual New York Open, and I was excited because I figured one of two things would happen, right? I figured as we opened, we would confirm this huge breakdown. We'd maybe go another 100, 150 points, right? And then there would be an opportunity for a bounce. Now, I'm not sitting out here trying to catch the falling knife, right? The first move up is not the one I'm going to trade. But I figured at that point, the markets would need a little bit of a correction within the correction, as it were. And so I would be sitting there looking for a potential long play, maybe not in the first hour of the market, certainly, but as we move into the lunch in the afternoon. Or I thought we would bounce hard at the open. This is actually what I did think was going to happen. This was my thesis as the markets open. I thought we would have a good 80 to 100-point bounce in the first 30 to 60 minutes, and then it would give an opportunity for a confirmation of the downward move. Okay, turns out really none of that happened, right? There was some movement. There's probably people here sitting, on a decent amount of trades. I would have laughed at you had you told me as the market opened, hey, Matt, you're not going to find anything you really like today. And I didn't. This is only not counting the week where I was doing a bunch of back testing on some things. This is only like the 4th day of the year. I didn't make any trades. And now part of that, I did have a doctor's appointment this afternoon. Nothing serious, just check up. But, so I'm sitting here in the first couple hours like, boy, this SOP is really not going to do anything, is it? Very, very frustrating. But at the same time, I can only be, I'm frustrated the market didn't give me any opportunities, but I would have been more frustrated if I chased some opportunities. And this is kind of there's a little bit of a paradox when the market's open. It was close to a 1.5% move down at the open, give or take, 0.1%. In theory, there should be some good trading at that point, right? But when the markets are down or up, but for today, let's just down 1.5%, I'm really hesitant to go short right at that point. See, because like I said, I was hoping for a bounce and then the ability to short on a confirmation of the downward move. But down 1.5%, it's really hard to short right at that there because essentially it's chasing, right? Think about buying if the ES is up or the NQ or whatever, 1.5%, and you buy, that's a chasing move without, buying up at +2 standard deviation, selling down at -2 standard deviation. By my definition, that's chasing. The other side of that is the markets are down 1.5%. Why the hell am I going to try to go long at that point? Right? Again, the old phrase, catching the falling knife. You have better luck going in your kitchen, grabbing the biggest knife you have, flinging it up in the air and trying to catch it, right? Every now and then you'll catch the handle. And you'll feel pretty proud of yourself, and it'll be a good outcome. And then sometimes you're going to grab that blade, and more often than not, you're going to grab that blade. You're going to drop it. It's going to cut you. It's going to fall on your foot. Whatever, right? So So again, now on the 4-hour chart, I wanted to look at the ES specifically to start because the ES has moved right back into this 5250 level. In fact, we're going to go ahead and pull this over here, guys. And again, this is why we look at these areas on this show, and this is why you guys should be looking at 4-hour charts on your own, right? Supply with this, the old saying, stocks move supply to supply, demand to demand. Guess what? Futures do as well. They're a little more they're a lot more chaotic, but this was an area, guys, that served as a triple top before, right? One top here, one top here, one top here before charging up through. So if we came back to this level, we knew this would probably be an area because, again, what is one of the core tenets of technical analysis? Previous support becomes resistance. Previous resistance becomes support. In this case, this was prior resistance, and it came in and is now support. A nice multi-wick rejection of the probably about the 5244 level here. And if we go over to the NQ, very similar action here, right? And I don't want to have too many zones on my chart, but you know what? We're going to get rid of this one. Actually, we're going to move this one up, okay? Because I think this is an important area to highlight in the chart, right? So this was an area that had prior acted as both a little bit of support and resistance, right? So this isn't necessarily an area we're going to say, okay, this is definitely support or definitely resistance, but every time we've come into this zone, the markets have reacted, and the markets have gotten decisive, either shoving the price action down or pushing it up. And in this case, this was our bounce area. Okay, we're back now above this 18,300 level, which means assuming we open above 18,300 tomorrow, I'm going to have a bullish thesis up to 18,500. Now, if we break down back into the zone, especially if we break out below this zone in the 250 to 240 area, I will have a bearish thesis all the way down to 18,000. So again, we're kind of just coming out of this area where I expect a move back up here. As long as we're above 300, that's my thesis. Okay, but we could also break down below 1800. But again, let's see where we open tomorrow. Anywhere over 300, I'm bullish up to 500. Okay? All right, I want to catch up, guys, on the chat. Excuse me. First of all, Mike, you were one of the winners last week. Okay, that's great. And you've already, wow, I just enabled that a couple hours ago. You've already watched part of the RTT. That's great. That's hey, I'm happy. I'm happy you're happy, right? If you're happy with the content, I am always happy. So make sure to spread that around, and I definitely appreciate that. And somebody like you, I'm glad to see winning because I know you're here every day and you're here learning, you're asking questions, you're participating. So to you, Mike, this drink of just water, that's for you. All right, moving on. Diego, what's the giveaway today? We have no giveaway today. Tiana, hello. Tyler, nice. Hello. Diego, James, outstanding. What a tear in gold. Was a great market today. Yeah, Paul, that's my next step as my evolution as a trader, right? I'm about 80 to 85% in the indexes right now. I don't seem to have a feel for gold yet. It's on it's one of my long-term goals, like 2024 into 2025, is to trade gold a lot more because I do like the way it moves. And you're right, like today was some outstanding stuff going on. It's not something I'm overly comfortable with, right? I always talk about being in control of your trading, being in, and yeah, I mean, it's like I have my style. There's probably some people out there say, man, I had some great opportunities today. I had exactly hit my, I had 3 prime setups. They all pay. Hey, that's great. Okay. There is somebody, whether it's, a retail scalper or an algo or whatever, no matter how little the markets are moving or how much the market's moving, there are people that are going to make money and people that lose money. Right? And this is the tough thing. I can tell you right now, the Matt of 8 years ago, and I didn't trade futures at that point, but the Matt of 8 years ago would have sat here banging his head on the wall all day. And sure, maybe I would have made a little money here or there, but I had a relatively stress-free day, guys, because I didn't see any setups. Therefore, I wasn't, necessarily taking anything. I like the movement, and because of what I outlined on the 4-hour, I'm really excited as we go into tomorrow. But, guys, I showed you yesterday. Yesterday was a decent day, but not the heaviest mover, and it was one of my best days of the year. And today was didn't, at least again, according to what I look for, didn't give me a ton of opportunities, and that's okay, right? Because I know if the old saying, I have no idea how many opportunities the market's going to give me tomorrow. All I can tell you is I know what I'm going to do with them. And once you have that confidence and have that ability to do those types of things, that's where you begin to have quite a bit of success. And guys, that's a good segue into our lesson of the day. And this is something I want to come back on and talk about the importance of having a process, a trading process, right? So Mike won one of my course packs last week and was talking about this RTT setup. Now, the RTT setup is a pretty simple setup that I teach a lot of my clients, right? It is by no means this groundbreaking, the one strategy. No, it's none of that BS. I look for simple patterns, my style, okay? Simple charting patterns, whether they're Renko-based, candlestick-based, or something like VWAP-based, okay? Simple patterns with market backup, things like the advanced decline difference, the ADD, the VIX, key areas on the chart, right? So as I told you right now, let's say right now is tomorrow at 10 o'clock, and the markets are sitting here at 340. Okay, so again, as I've told you, my thesis is bullish up to 500. Okay, so I'm going to be really on the hunt for some good bullish trades as we move up and really be favoring those types of setups. Now, does that mean I'm absolutely not going to take a bearish trade? No, but it better be an A-plus trade, right? Whereas I would be willing to compromise a little bit on quality of setup, not the setup itself, but quality of setup if it agrees with my thesis, right? So if I have a bullish thesis, and I'm looking at a trade, that's a B to B plus trade, but it is a long trade, and I have a bullish thesis up to 500. Well, that's going to take that grade up a little bit, right? And so instead of being a B trade, maybe it's an A minus trade. Whereas, a B plus short trade when my thesis is long really is more of a B minus C trade, and I don't take C trades, right? So again, you have to have a process. You have a playbook, right? So you have a defined play. Now, some people have, and actually I've done this in the past with certain setups on a swing trading perspective, right? Because I used to trade small cap stocks. When we're looking at small cap stocks, we don't really care much. I mean, there is some correlation, but we're not watching the S&P. We're not watching the SPY. We're not watching the Qs. We're mostly watching the Russell, right? And we're mostly just watching that individual stock, because if it's a catalyst-based stock or it's like a fib retracement on a stock or something like that, sometimes it does not even matter what the markets are doing. I've traded stocks, small caps up 20% when the market itself is down 3%, right? It's just, those types of catalyst pump and dump type stocks, to be quite frank with you, don't really have any bearing on the market. So I actually traded some setups that were only rules-based and had nothing to do with anything outside of that chart. You're looking at the chart. It satisfies these, 5, 6, 7 prerequisites. It hits the trigger, and then you just follow the exit rules. Now, as a more experienced trader, I look for simple patterns with market backup, especially because, again, I predominantly trade the indexes. Now, as I move into things like gold, like was just brought up a minute ago, am I going to pay as much attention to the VIX when I'm in gold? Well, no, not necessarily, because gold is not always the stocks go up, gold goes down, and vice versa that it was 20, 30 years ago. One of my mentors, she used to tell me I traded gold religiously for 10, 15 years, and when it began to not be a safety asset, things you could trade a little more actively when the markets were in correction or in an honest to goodness bear market, then I stopped paying attention to it. So again, just kind of one of those things. Okay, I do want to catch up on the chat here. If you have any questions, guys, I forgot to say at the top of the show, but most of you know this. This is an interactive show, so make sure you go ahead and, in fact, we'll go ahead and open up the mailbag here. And any questions you have, go ahead and type those in. I will actually put this up. If you have a question for the mailbag, guys, and I get a few of these per week now, most of them are things I answer, I talk about on a day-to-day basis, and that's okay. So if you have any questions that you want answered on this show, make sure you reach out to me on Discord. That's Trader Matt. Okay, just the basic Trader Matt name, or Matt at TiresiasTrading.com. That's TIRESIAS trading.com. All right, so let me catch up. No giveaway today. We do giveaways almost every Thursday, and we do occasionally sneak one in during the week. But yeah, in fact, maybe I'll do one at some point during the week next week. But stay tuned. You gotta show up for the flash sales and the flash giveaways, right? Okay, what else? Are we all caught up on questions? Everybody has their knowledge today, huh? Silver has done you well recently. Yeah, James, that's my next frontier. Not the final frontier, but the next frontier for trading for me is to get a little more into specifically gold and oil, because they're very liquid assets, right? Again, coming from the field of options, liquidity is king, and the ability to move in and out quickly without slippage is something I value greatly. Because if you've ever traded options without knowing what you're doing, which is something I've done before, and you mark it into a trade and instantly you're down, let's say you buy a $5 option, which is really $500 per contract, and let's say you buy 5 of them, right? And the spread is 50 cents. And so you hit send, and all of a sudden, instantly, the moment the position hits your folder, you're down like $300-400, right? Like wait a minute, right? Like now that can happen quickly if you're oversizing in futures, of course, but in options, yeah, that's a whole thing. But yeah, I did play a little bit around with some of the miners when I was doing ETFs and options and stuff like that. But yeah, gold is definitely on my to learn list this year. And again, that's just something I brought up the other day, guys. This is I always tell you guys, and I'm sort of going against my own advice here. This is the first time in about 3 years, because I actually went back and looked. In fact, it was over 3 years. I think it was early in the pandemic was the last time I didn't have any systems that are in development, right? I have my systems that I actively trade, and sometimes you adjust those. And I've been working for a few weeks on a new exit strategy for my most popular, the RTT that James mentioned, setup. And after a few weeks, I just decided, you know what? I don't think there's any more of an edge in doing it this way than it is how I actively manage it, right? So again, that I said on yesterday's show, and I stick to it, there's going to be times you're going to put a lot of time and energy and effort into learning a system, and either A, the system just doesn't work, just there's no edge, or B, it's not for you. Like I work with people all the time, and I'll teach them some of what I do, and they're like, well, I have trouble seeing that, and that's okay. Right. I'm all about, don't get me wrong. I teach my clients my strategies, but I am much more about teaching the process of trading and the process of developing your own setups. Right. We're in the heart of a bunch of sports seasons right now for you sports people, especially NFL fans. Who are the most popular, the most year in and year out successful franchises are the ones that draft and develop. Right. Yeah, you can go sign a flashy free agent every now and then, and sometimes that works. But that's signing a flashy free agent is the equivalent of paying, a couple $1,000s for a trading course that teaches you this perfect strategy or this or that. And I've learned a lot of different setup strategies. I'm working on some market profile stuff right now. I'm still kind of out and, jury's still out, as it were, on whether that's something I'm going to pursue longer term. I'm just sort of casually looking at it right now. But I always have at least 1 or 2 systems in development, and right now I don't. Partially because I've been working on getting my community off the ground, doing this show, things like that, for calendar 2024. But in the summer, I'm definitely going to be working on a couple of things, and it's a process, right? I talked about it on was it last week's or 2 weeks ago Super Show, which is available, guys. In fact, I think our good friend Raj back at the home office in Wahoo, Nebraska, has clipped out on the page that particular part of that show. It's about a 30-minute where I talk about building strategies, right, and how I develop them and test them and all of that kind of stuff. So I encourage you to check that out. All right, guys, so we got a few minutes left. Any questions that you have today about the markets? Let me know. Hey, guys, you guys red or green today? Everybody do all right today? Bueller. Quiet group today. Green. All right, Hope. That's good. Anybody? Let me ask this question. We're 2 days in. Anybody passed an eval with Blue Sky yesterday or today? I want you guys to remember that going forward, guys. If you pass an eval, I want you to let me know that in the chat. Small red. Okay. 15% of target, Matt. Hey, Divine, that's great, man. That's great. I appreciate that. Yeah, as the bot says, guys, remember to like, subscribe, ring that MFing bell, right? Little green. Yeah, guys, actually, as I surveyed some of the people I talk to on a day-to-day basis, seems everybody's sort of within a couple $100 of break even, right? And really, for me personally, if I'm, usually I don't necessarily have I used to, but I sort of changed it. If I'm like up $200 on the day or down like $200, it's basically a break-even day to me, right? Like, and I don't have a ton of red days anymore, thankfully, but I have very few red days that are like, $1,000 or more on the losses. So, oh, Andrew, I'm sorry to hear that. Well, at least you did withdraw, so you got to get back on the horse, right? And now take some time. Don't rush right back into an eval, right? What you need to do is just, go, because obviously you were in brokerage, which means you passed the eval, right? You passed the blue live, so you were in brokerage. So, and you're welcome to share if did you oversize too much, or was it just trying to trade in the conditions of the last week or so that just weren't conducive to movement trading and things like that? Or did you, make another mental trading error? I obviously, to get to brokerage, I'm not, if you get to brokerage, I'm not going to pronounce you an expert trader, right, yet. But you clearly at least have something going on, right, to get through the eval and get through the blue live stage. Oversize, okay. I will tell you this, Andrew, and this is just me personally, but and I trade my personal brokerage account, so I don't have to worry about a lot of the withdrawals and rules and all those good things. But for me personally, if I started an eval tomorrow and I made it to brokerage, I would probably cut my position size in half when I made it to brokerage, just to start, maybe just for a week or two, because now you're trading real money. Now there's the consequences of blowing an eval are you're out the eval fee, and or you have to pay for a reset. The consequences of blowing a brokerage are a little heavier, right? So there's a little more pressure there. So for me, I could easily see myself wanting to cut down maybe 30 to 50%, just so that if I freeze up and I make a few mistakes there, I'm not blown out of the account, right? So just consider that for next time. But hey, you did it once, you can do it again. Reassess. Make a plan, right? We talked about this with Jared Tendler a couple weeks ago. Make a plan for how you're going to avoid these problems again, and then you just got to stick to it. But you'll get there. You're here every day. You're here almost every day, Andrew, so I really appreciate that, and just know I'm personally rooting for you. And I expect to hear within the next 3 weeks or so you've passed an eval and you're on your path back to getting a brokerage. So you made it once, you can make it again. Okay, Lila, green today on my second day for 25K, down 190 from highest balance. Let a loss get too big yesterday. Yeah, Lila, that's going to, listen, I wish I could tell you that when you become a more experienced trader. Actually, Lila, I remember you've been trading for quite some time in a variety of asset classes, so you know this. You don't need me to tell you, but I'll tell you for the benefit of everybody else. You're still going to always, we're human beings. We're going to make some F-ups from time to time, right? I do occasional dumb stuff. It's just about recognizing when you're about to, or you have done something that's a little less than intelligent, and taking steps to correct it right away and not making more compounding mistakes that just sort of build up at that point. When's the next giveaway, Lucas? The next giveaway is whenever they tell me the next giveaway is. So, man, look at those alternating bells there, Mike. I appreciate that. That takes some effort to put that together. So, yeah, so that's basically. And besides, Lucas, you're here for the knowledge, right? The giveaways are just a bonus. I listen. I know that I see the viewer numbers when we pre-announce giveaways. I know it's okay. Nothing wrong with coming here to get the giveaway, but you might as well get a little knowledge in the meantime, right? That's all right. I just like giving people crap. Yeah, honestly, guys, let me give you one more little mental trading hack, and then I'm definitely going to call it a show for the day. And I do appreciate everyone being here today and the questions and all that. Guys, I am very much of the mindset of work hard, play hard. Now, let's evaluate what that means, right? Because everyone hears work hard, play hard. They think, oh man, yeah, a couple times you got to get on the plane, go to Vegas. You got to no. That's like my idea of play hard is like sit on the couch and literally do and think of nothing and watch like a hockey game or something like that. For me, that is playing hard, right? Because my mind is constantly going on like what's the next strategy I can work on, or boy, what can I do to get more people in my community? How can I help the people at Blue Sky and make Beyond the Bell a little better, right? These are the thoughts that are going through my head, like. And 95% of the time I'm awake. Okay. So with that in mind, then for me, play hard means I can, and I don't get a ton of time to do it, but whether I'm sit and watch a game or, play a game of Madden or something. I'm not a huge video game guy, but I do like it. Do like a few games from here, some sports games or a little Red Dead or something like that. Right. And just to get the brain off of all this. And guys, you have to do that. Okay, if you're a younger guy and you do like to go out bar hopping or something, that's okay. Do what you need to do. My bar hopping days are about 20 years behind me, but that's so yeah. Make sure you have something to decompress, guys. You're gonna need it on bad days. Believe it or not, you're gonna need it on good days as well, because you can't carry negative or positive emotions either from trade to trade, let alone day to day. Okay. Marcos says, are there keys that you look for when deciding you're going to trade NASDAQ or SPY futures? Do you have a preference, or do you both, like long SPY and NASDAQ at the same time? Marcos, it's not a rule for me, but it's a guideline. I usually only have one position on at a time because I tend to actively manage my positions. Now, I have rules for exiting them, but especially when it comes to, let's say I have a trade going my way and I want to scale out, I only have rules for the first half of my position size, or first third of my position size. So after that, it's just me assessing the markets and saying, okay, I think we got some real room to run here. I'm going to leave this last contract on for another couple minutes. Or, you know what? This is a 2 ATR move already. You've already booked $800 in profits. You can book $600 more with this particular closing out this last contract, make it a $1,400 trade, and have a really good day, right? So those are the things that I'm constantly assessing. So I think there's only been once or twice this calendar year 2024 that I've been in more than one position. And again, because I do predominantly trade the indexes, long the SPY and long the ES is, they don't move exactly the same anymore, right? But you're long the indexes. I'm going to take, if I want to be long the indexes, I'm going to find the one with the best opportunity and the most room to the next area of resistance, and that's which one I'm going to trade, right? So all right, guys, so I think that's a good place to wrap up for today. So, again, we're going to come back tomorrow, do our normal Wednesday show. Then we have a giveaway Thursday. I'm assuming we'll have a giveaway. They haven't told me yet. But if they don't give away something, I'll give away something. So, and we'll probably do both. So, guys, I also do have, I just want to let you guys know, I'll give you more information on this on Thursday. I have a free webinar coming out on my YouTube page in a couple of days. I'll let you know about that. It's specifically focusing on how, you guys have heard a little bit of it here, how I focus on my overall market thesis, right? And I call it the top-down approach. So looking at the 4-hour, then coming down to the 5-minute and getting a thesis and how that informs me of when to trade and when not to trade, because believe it or not, that's just as important. So regardless of that, guys, thank you for tuning into another edition of Beyond the Bell. I appreciate each and every one of you showing up here every day. Have a great rest of your day, and I'll see you tomorrow. Good night.